I know so many examples. I interviewed someone on my podcast recently who the same basic thing happened, but the insurance agent never found out that it was vacant. There was a fire and it burned down the entire place, and the insurance company denied the claim. So the occupancy piece is a huge example of taking that time to describe to your insurance agent what you have going. And a good insurance agent will know the questions to ask. And occupancy is a huge one. You want to make sure there's really three types of occupancy. One is like a homeowner, you live there, which obviously most of us don't have that in the real estate investing side. The second one is a tenant lives there. So that could be an annual tenant, that could be a short-term tenant, but somebody that you have an agreement with that they can be in there lives there. And the third one is vacant. Well, those are three different types of insurance policies. And so if you don't have the occupancy right, then you don't have the right insurance policy, and you get into a scenario where something bad happens and you don't have the coverage you need. So when it comes to solutions, I kind of feel like I do a lot of the solving on my side. So if for a real estate investor, again, it comes back to that great agent, but those are some examples of ways to solve things when it comes to insurance.
Welcome to the Ask Me How I Know show. I'm your host, Julie Holly, and I'm so excited you're here. Ask Me How I Know is the only podcast in the multifamily niche replicating what takes place outside the walls of a seminar. Remember when we used to get together like that? This is like the lobby where honest, unscripted conversations take place and transformation happens. We'll talk about practical problem solving in the multifamily niche as well as overcoming mental roadblocks. This episode is brought to you by 3 Keys Investments. 3 Keys Investments is dedicated to helping people like you, you, enter the multifamily investment space to build passive income and legacy wealth. If you haven't already subscribed and reviewed Ask Me How I Know, I'd be honored if you did. Thanks so much for joining me today, and now for our featured guest. Hey guys, welcome back to another awesome episode of Ask Me How I Know. I am so grateful to have you joining us again, listening. And guess what? We have a absolutely phenomenal guest today. Jeremy, we are connected over on LinkedIn. That's where we initially met. I love LinkedIn, but I have just thoroughly appreciate your content, both across social media platforms and via your podcast as well. So thank you for creating that, and welcome to Ask Me How I Know.
Julie, I've been looking forward to this conversation for a while. I love your podcast. Congratulations, by the way, on being on our list of top 20 rising podcasts in the real estate world. I think that's really exciting, and you absolutely deserve it. So thanks for having me on.
Well, thank you. And that was such an honor to be on that list. And I know that there was so much thought put into that list and time, and so to curate that list. What was the supercharge behind creating this amazing list?
Well, I think there's a lot, I think it probably started when I go out and look for like top 10 real estate podcasts, and there's some great ones on there. Absolutely. Right. But every single place you go, it's the same exact list of podcasts. And I was like, man, I know there's hundreds of podcasts about real estate investing with people who are super smart on the topic. And how can I further elevate those shows? How can I bring those shows to a greater audience? How can I, share with real estate investors the different things that are out there? And obviously I have a podcast in that space too. So all those things kind of came together, and I was like, let's just make a top 20. And we're going to start doing that about every 6 months or every year to see kind of who's coming up in this space and who's doing a great job. We all put a lot of work into our podcast. We all really want our listeners to grow and understand new things and have their mind opened to whatever it is we're talking about. And I just wanted to get that out to people as well as I could.
Well, it is phenomenal, but that really it falls completely in line with who you are, and you're such a giver, and you're always looking to build others up around you. It's something I very much admire, about how you go about doing things. And so thank you so much for that. And I even want to think about the giving. When you look at what you do with Shine Insurance, here you are, you're putting your tentacles out into all these other niches, other little micro parts of the industry, and you're this insurance person. And a lot of times people will just want to stay within their own little group of people. So I love
Right.
how you reach out. What was the catalyst for what's the relationship between Shine Insurance and your podcast and your thinking behind going that route?
I think it's a great question. So when I started Shine Insurance, like I was a school teacher for 13 years. So I taught third and fourth graders, all different subjects, how to read, how to write, how to do math. And I think that there's a certain skill it takes to teach a fourth grader how to do division, right? And I enjoyed that. I loved that. And during that time, I met my wife and business partner now, Mackenzie, and she's a third generation insurance agent. So her grandpa started an agency. He sold it to her dad. And when I met her, she was running that agency and had been a part of that agency in some ways since she was 7 years old. She used to go in and shred paper in the shredder and make whatever her dad would give her to do that work. And so those two things came together. And I think that as, for a few years while we were getting to know each other and eventually getting married, she talked a lot about the industry and a lot of things we see in real estate too. They align a little bit. There was a lot of misogyny, a lot of sort of old boys club situation going on in this space. She ended up in a lot of rooms where she was the only woman and, experienced some of the things that just come with that and was feeling a lot of frustration around that piece and was ready to try and do something about it. And so I was kind of ready to move on from being a teacher as well. So we started coming together on the topic. And she was actually, at first, actually, she was wanting to just start another business. She was thinking about starting a restaurant or something else. And every time it kind of came back around, it was like, I have this skill. There's this industry that's kind of ugly. And why not connect with that? And so the two of us decided that, hey, let's drop everything. We saved up a little bit of money. And in 2013, we dropped everything. We started Shine Insurance with our goal to, in our little way, try and affect this industry a little bit, try and push it in the direction we felt it needed to go. And we've been doing that ever since. So that's the backstory. To answer your question, though, I was a teacher, right? And so as I was coming into this industry, I was realizing that people had just trusted me inherently, right? They dropped their kids off and just assumed they had a great day all day, and they did. And it was awesome. And I loved that trust. I appreciated that trust. And I always appreciated that trust. And I came into insurance and nobody trusts an insurance agent, right? Like they just sort of expect you to be slimy. Like it's like the expectation. And so
It's
I
true.
was,
You're just trying to sell me on something. Okay.
yeah,
What's the
right.
lowest grade package I can get here and still have 1,000,000% coverage?
Yeah, right. Absolutely. And so I was sort of struggling with all that. And I was also an entrepreneur, because we started an independent insurance agency, which doesn't mean it means I don't work for any insurance company or anything like that. I'm a business owner on my own. And so to get to the answer to your question, I was reading a book by a great author. His name is Jay Baer. And he writes a lot of books about marketing and putting yourself out there to folks. And the book that I was reading is one of his older books called Utility. And his basic premise was, the most important thing you can do to connect with people is to do good things for them. And it doesn't matter. Yeah, it doesn't matter if it's on topic. In fact, it's probably better that it's not. And he gave lots of examples in that book. And one of the things I love about Jay Bear is every book that he writes can be explained in one sentence, like I just did. It's like, do good things for people and then connect your brand with it, because obviously you want them to take that turn towards your brand when they think of whatever it is that you're offering. And I really took that to heart. And so ever since then, I've just been trying to think, all right, who is my ideal client? Who is the person that I want to work with the most? All right, I've got that picture in my mind. What can I do to help that person? How can I make their journey better? How can I make their life better? How can I share information in a simple way about something that maybe they didn't really want to spend a whole bunch of time on and just want the darn answer? And so I started creating videos on YouTube and doing social media stuff. And that was in 2013, 2014. And that's just grown. So we have 13,000 followers on our YouTube channel. And most of that's just trying to share information on topics like I do for real estate investors.
So, wow, so many things there. You're such an early adopter of the video technology within this industry. I mean, YouTube and everything that's been around, but it's been around and it's served in other capacities. But really, for business owners to be harnessing the power of that, you were a forerunner. Congratulations.
Thanks. Yeah. I mean, and the video is kind of hard sometimes, it's the technical side of getting it set up and getting it right and making it look good and then getting it up on the, YouTube and stuff like that. And I guess I would encourage anybody who's moving down that road, like, don't get so caught up in the tech that you never get any content out. If you're using your iPhone or whatever to record, as long as you're sharing good information, good content, that's driven directly at the ideal client that you want to work with. And sometimes your content isn't about business or whatever, but it's driven at the ideal person that you're trying to talk to. Talk to one person. Imagine that person in your mind, and then talk to that person. And I think, I'm not sure my videos are all that great, but there's something that's working there. And so I've just always tried to talk to one person in that process, and it's worked out okay.
I take that advice personally to heart, because that's how I get through most things. If I'm speaking in front of a group of people, no matter what it is, it's one person. That's it. It's okay.
Yeah.
You can handle one person.
Yeah. And I would encourage business owners, whether it's in real estate or anywhere else, to refine who that person is, though. The better you know that ideal client, some people call it like the ideal client avatar or something like that. Like, the better you know that human, what they do, what do they drink when they wake up? Like, what do they talk about with their friends? The more refined you make that individual, the better you're going to speak to a larger group of people who identifies with that same thing. So don't be afraid to really zoom in on a person. And if that repels some people, that might actually be a good thing, because it means that you're zoomed in on the type of person that you're looking for.
Wow, that's great advice. Now, if people want to look for your YouTube channel, just let's drop a quick little what's the name of the YouTube channel?
Yeah, so it's the Shine Insurance YouTube channel. I mean, honestly, the way most people find the YouTube channel is asking questions about things like real estate, like, what's the difference between replacement cost and ACV coverage for a roof? Like, I think my video is probably the first one you'll see. So, but the Shine Insurance YouTube channel, and we've got information about real estate investing, real estate in general, and some insurance there as well.
Well, I love that. I have to backtrack here and say that I'm a third generation in the real estate industry in my family. And when I was about 7 years old, you got to tell your wife this, I would go and take water from the water cooler and I'd grab a few dozen sugar cubes, right? Because that was a thing back when I was a kid.
Yeah.
Plop those in there and have sugar water. Oh, good times.
Yeah, I think that's interesting, because there's maybe you have experienced this or maybe you haven't, but there's this push and pull, I know, and my wife Mackenzie, between, like, I'm doing the thing that my family's been doing forever, and does that mean I don't have some creativity to go out to some other place? That's one sort of side of the struggle, and the other is like, I know this thing really, really well. I know it like it's in my bones, and why wouldn't I continue to do that and bring my own version of that to the thing I know so well? So I don't know if you experience that sort of push and pull between those two things or not.
Probably not, actually, just because I've gone a different direction altogether with real estate. So everyone else has stayed, residential, and so, and so I'm the little black sheep that went into the commercial world and said, actually, guys, there's a better way. Let's go this way. This makes a whole lot of sense in every way. I love all the good that can be done. And speaking of good that can be done, having the right insurance in place is really a good thing, right?
Yeah, absolutely.
I'm wondering, because honestly, I feel like the insurance conversation is one where, as an investor, I'm filling out, I'm analyzing a deal, and it's like, oh, I'll just put, I know insurance is going to run about this, but that's about it, right? Like, when you're underwriting a deal, you're not, on my side, it's not like I'm really thinking about, well, what is that coverage? And is it going to take care, yes, down the road, I am thinking about that more intensely. Like, okay, this asset's in this location. I'm prone to hurricanes or tornadoes or whatever it is. So, like, let's just talk to, somebody is underwriting their insurance deal, and maybe they even have their LOI is accepted. They're really excited. They're doing due diligence. We really need to have this insurance in place. So when should we talk to you, and what should we be doing?
I think that's a great question. And for newer commercial real estate investors, I would really encourage you to engage with that insurance agent early on. So check in with that insurance agent really early. If you're somebody who's, has been doing it a ton and really knows your stuff, knows your insurance agent, knows that it's basically going to be the same as that other 144 unit that I have in the same town or that I have a couple of towns over, then it probably makes sense to just throw that number in, ballpark it. If it underwrites well, fine, and we're in good shape. But I think that the things that you really want to talk to your insurance agent out before you make that LOI and are one, if you don't know the market very well. So if you don't know the market, insurance could be all over the place. And maybe the seller shared their insurance numbers and you're like, well, yeah, that makes sense. I'll just go with the seller's numbers. But the seller's numbers more often than not can be all over the place. So that seller could have 10,000 units and you're picking up your first 100 units. Well, they're going to have a much lower price per unit than you're going to have. So that's going to be a abnormally low. You're going to think your number is that low and ultimately it's going to be higher. The seller could have gotten the insurance when that property was in really good shape with a rather new roof with 90% occupancy and everything underwrote really well on the insurance side. So you're underwriting on the real estate side, but there's underwriting on the insurance side too. So they're looking at that property. In essence, insurance companies only underwrite a property when they write the policy. So if that policy was in place for 10 years and everything looked good 10 years ago, but now you got a property with an older roof, 70% occupancy, some deferred maintenance, that price could look a lot different. And so I guess my best advice, Julie, is one, have a relationship with a good insurance agent that you trust and you have their cell phone number and you can just reach out and they can shoot you a ballpark. And two, make sure if it's in a market you don't know, if it has something about it that you question. You said the hurricane piece, right? Like if it's in a place where you just know, if it's in Texas and you haven't invested in Texas very often, find out a hard number for insurance on that before you even make an offer, because you could really get surprised by that. I've heard coaches and advisors say, well, put $300 a unit on your underwriting and go from there. Well, I offered someone a policy this week that was $200 a unit. I also offered somebody else a policy on the same exact day that was $700 a unit, And so I don't think that there's just a bottom line number you can throw in there. It depends on the space and you got to be thoughtful about that.
That's really insightful. Especially for newer investors or people that, investors that are changing markets. And I think there's going to be a lot of market switch up taking place in the next few years because opportunity means you might go somewhere else, right?
Yeah, absolutely. And I think for the most part, you're going to know, and veteran investors have a better sense, and a lot of time the seller will give you some numbers. And so I'm not saying seller numbers are always wrong, because that's a pretty good sense of at least one insurance policy on that property that you're looking at. But it's just really important to have that relationship. And I would reach out even before you put the LOI in maybe, but certainly during due diligence to make sure there aren't any surprises.
Yeah. Oh gosh, definitely during due diligence, if not sooner, right?
Yeah.
So what are some of the, you have so many things that are just, I appreciate so much, right? And so another thing that I appreciate about you, Jeremy, is that you are a solution finder. I'm not into, and maybe that's a school teacher thing, so I'm into, let's just find a solution. Let's not dwell on a problem. So, So I'm going to phrase this question in the solution-oriented way. What are some solutions that you have found that most investors don't even know they're aware of?
On the insurance side in specific, or real estate investing in general?
Let's do insurance side specific. And then if you want to add, you can add more.
Yeah, I think that on the insurance side, like the biggest solution is to find the right agent. And I'll get more into the policy stuff, but I think that if you have that, like you said at the beginning here, when I'm doing my underwriting, I don't want to spend a bunch of time on insurance. I certainly don't want to dig through a 200-page document and try and understand it deeply. I want to know that I'm covered, but that's not on the top of my list. And so I think the biggest solution that you can come up with there is someone you trust, that you have that relationship with. I think the other solution is to explain what you have to whomever you're asking for an insurance proposal from the very beginning. So problems come up when we don't spend the time telling the insurance agent what it is we've got. I'll give you a great example. There's a client that I work with who we put together. I kind of couldn't get that person to give me information. And it's always weird, right? Because I don't want to bug people. I don't want to like keep asking them a bunch of questions. And that's why we don't like insurance agents, because it's like, hey, here's this other question. Hey, here's this other question. Will you fill out this other form? And we do at Shine, we do everything we can to find out every single piece of information available without having to ask people about it. We've got a system in place to really do that. But sometimes we've got to get some more information. And the investor didn't give me that information, that there was a lot of vacancy in a big complex. So I didn't know, in fact, that there was an entire, so it was it's a 80 units, something like that. And there's one entire building, like a 20 unit building, that had 0 occupancy. So that wasn't underwritten properly on my side. Now we fixed the problem. Like ultimately I got the answer and we got it figured out, but I was thinking about it and I was like, I know so many examples. I interviewed someone on my podcast recently who the same basic thing happened, but the insurance agent never found out that it was vacant. There was a fire and it burned down the entire place, and the insurance company denied the claim. So the occupancy piece is a huge example of taking that time to describe to your insurance agent what you have going. And a good insurance agent will know the questions to ask. And occupancy is a huge one. You want to make sure there's really 3 types of occupancy. One is like a homeowner, you live there, which obviously most of us don't have that in the real estate investing side. The second one is a tenant lives there. So that could be an annual tenant, that could be a short-term tenant, but somebody that you have an agreement with that they can be in there lives there. And the third one is vacant. Well, those are 3 different types of insurance policies. And so if you don't have the occupancy right, then you don't have the right insurance policy, and you get into a scenario where something bad happens and you don't have the coverage you need. So when it comes to solutions, I kind of feel like I do a lot of the solving on my side. So if for a real estate investor, again, it comes back to that great agent, but those are some examples of ways to solve things when it comes to insurance.
That's interesting. As I watch my husband, he's a residential realtor, and he's always doing, just like anyone in there, whatever given profession you are in, you're taking care of all the things behind the scenes. Your job is to make it easy for your client, to make it just seem seamless. Meanwhile, you're hustling on the back end of everything, right?
Yeah. Yeah. And if a realtor, if this is a great example, because if you were going to go buy a home, or even if you're going to you wanted to buy multifamily property, and you went to a realtor and you said, I need a multifamily property. And then you stopped there. Like, that's sort of what happens with insurance a lot. I feel like is people are like, I need insurance. Let me know. It's like, wait, like, what size property are you looking for? Like, what's your budget that you're trying to hit? Like, what are the markets that you're interested in? Like, do you have financing yet? Or are you still working on that too? Like, a realtor needs to ask a bunch of questions at the beginning for the purpose of understanding what that person needs. And I think the same is true for all of your service providers in a lot of cases, whether it's your lawyer or your accountant or your property manager or whoever. And that's certainly true with insurance as well.
That absolutely true. Well, what are some of the differences? You mentioned short-term rentals, and we both know short-term rentals are hot right now.
They are, yeah.
and so hot. So what are some of the nuances that, those wanting to go into that short-term rental market, what are some differences? Maybe they have some multifamily assets and they're, just spreading out into this other asset class. What would they say, oh, that's different, aside from obviously size?
Yeah, no, I love that question. I think short-term rentals is interesting. My answer 2 years ago to how short-term rentals were handled by insurance companies is vastly different than my answer right now. But first, let me get to the piece that you described there. If you've got a bunch of multifamily, you've already got a commercial real estate insurance policy, and then you pick up some short-term rentals in that same entity name, or you have it set up that way, it's probably pretty easy. They just add it to the schedule of properties that you have. They note it as vacation rental rather than annual tenant rental, and you're good to go. So if you've already got the commercial policy in place, you're a bigger investor, probably not that big of a deal. I think that where it gets a little harder is for the folks that are doing short-term rentals and it's their only investments, or it's their first investments, and they're thinking, well, I've got a homeowner's policy, or maybe I've got a couple of single family homes that I've had annual tenants in, and the insurance was pretty easy on those, so let's get some short-term insurance and just throw it on. And their insurance agent is like, it's harder to insure than the other stuff. And they're like, well, why? Short-term rentals, because there's more turnover. From an insurance company perspective, they're always thinking about, are the humans in the space likely to take care of that space or likely not to take care of that space? And obviously, a homeowner's policy is the highest level of the human in that space is likely to take care of it. It's your own home. You're very likely to take care of it. And so those tend to be the cheapest insurance policies. Annual tenants is sort of the next one, right? Because an annual tenant, even though it's not their own home, it's still their house and they're living there and they're likely to take care of it. Short-term rentals and into the hotel, space and hospitality and stuff, insurance companies kind of see that as, well, people coming in and out, they don't have any investment in that space at all. They may be less likely to take care of it. And so it's been harder to insure short-term rentals in the past. But I'll update that a little bit and say more and more insurance companies are saying, you know what, Airbnb's been around for a while, VRBO's been around for a while, we're getting more comfortable with this, we find a little more trust in it. We can just add a little endorsement to what would be a normal tenant-occupied policy, and it just says, hey, this is a tenant-occupied policy, but it's a short-term tenant-occupied policy. So I don't know if that was a long-winded answer or exactly where you wanted me to go on that, Julie, but it's easier to insure short-term rentals than it used to be, but you want to make sure that it's a vacation rental policy is the most important part.
No, that's a 10 out of 10. Way to go. 5 stars. So,
Cool.
okay. So also when you're insuring those, is there a rule of thumb that we can kind of toss at it? I am putting you on the spot right now. Is it
price-wise?
Yeah.
I mean, so it's hard because just different markets, different prices. I mean, if you've got, a short-term rental on the coast of Malibu, that's going to be a little bit of a different price than if you've got something here in the Midwest, as opposed to if you've got something in Florida. So to throw a number is hard, but I think the easiest thing to say is, if you have a sense of what an annual tenant policy would look like, I would increase that by maybe 25 or 30%.
Okay.
So it's going to be more expensive per unit than an annual tenant, like a multifamily or something like that. And it used to be that it was double. I mean, again, 2 years ago, I would probably say if you've got short-term rentals, you should expect double price-wise as compared to an annual tenant policy. That's really changed over the course of the last 2 years. Now I would say, expect 20% more than what you might pay if you were going to put an annual tenant in there.
Okay. I think that's nice for listeners to kind of just have a gauge. We all want that. We just want to know, like, just give me at least a ballpark. When you go to get, you have a contractor come over and, they have to work up a bid. You're like, just give me a ballpark at least. Like, is this $100,000 or is this going to be like 20 grand?
Right. Give me something to wrap my mind around. And I do that a lot. Someone will write me and say, hey, can you throw me a ballpark? And I'll ask a few questions because I want to make sure I don't create a problematic ballpark. If I say, I think it's going to be 80 grand because of that market and what I know about traditional multifamilies, and it turns out it was built in 1972 and has aluminum wiring, well, I'm way off. I just completely created a problem for that investor because they underwrote it at 80 grand for the insurance, and the reality is the insurance is actually 200 grand.
Right.
So we've got to be careful with the ballparks, but I love to throw out a ballpark for exactly what you just said. Like, that is what a person is looking for, is just something to work with to understand if this deal is a good deal or not.
Right. Yeah. I mean, I definitely experienced that where I just need to know if I need to continue pursuing this or not. Like, just please let me know.
Yeah.
Because that might be the linchpin. I don't think insurance is typically the linchpin.
More and more. I mean, I think I'm hearing more and more that insurance is killing deals. And I think that's because insurance premiums over the course of the last 3 years in particular have dramatically increased. And there are some ways to control that. And I'm certainly trying to control that for my clients, and I think doing a pretty decent job of it. But you're seeing increases in premium where it's really different. And again, I think the other big mistake that people make in the way it kills deals is they use that seller's insurance policy, and there's something drastically different about the scenario, and it's a $30K difference. and it kills deals. So I do see insurance killing deals more than I think it used to because it wasn't underwritten early.
Wow. Okay. So what is driving insurance premiums up?
It gets in the weeds of insurance a little bit, which I think I like, and hopefully your listeners will like as well. So I do see it flattening out a little bit, so that's the good news. I think the number one, there's really two main reasons that I think insurance premiums have been going up. The first one is roof claims. So there's this push and pull between roofers and contractors, and I've had lots of them on my YouTube channel, and we've had back and forths, but coming out into places where there's a hailstorm. So, you can look online and see where a hailstorm was yesterday and see a picture of it, and then go out and go to every single investor there and say, hey, I can get you a new free roof, right? And as an investor, if you've got 22 buildings inside of that space, your roof is 15 years old, and that person is saying, look, I can save you $300,000 by just filing an insurance claim. It's hard to say no to that. And as far as what side of the argument I'm on, I'm not trying to be on one side or the other, but there have
It
been
is what it is.
it is what it is, right? And I certainly understand where people are coming from, but that has created a ton of loss for insurance companies. And obviously these are businesses. And so when they see that they're losing big money on things, they have to adjust a little bit. In fact, particularly in the multifamily space, insurance companies as a whole have lost money for the last 13 quarters in a row on multifamily.
Oh, wow.
And so, one of those reasons is roof claims. And the other reasons is liability claims. So liability coverage is for bad things that happen to other people because of you or your building, right? Someone trips on the steps or falls over, or, God forbid, a back porch falls and people get hurt and things like that, right? And when this happens, oftentimes people hire personal injury attorneys. And we've seen a lot more litigation in that space, and particularly some states have opened up the laws around litigation. And so we've seen a lot more losses, claims around personal injuries, so injuries to people. And so those are the two main drivers of price going up. But the bottom line is a certain amount of money comes in, a certain amount of money goes out. If an insurance company sees that a certain class is consistently losing money, then we see insurance companies do a couple of things. One, sometimes insurance companies will just say, I'm out. So Florida is an example. In the mid 2000s, when there were multiple hurricanes in a row, you had a lot of good insurance companies in Florida for a while, and prices were pretty decent and things weren't too bad. Well, a few hurricanes come through, all these insurance companies just get nailed, and a whole bunch of them just leave Florida. They're just like, we're out. And so sometimes insurance companies just say, we're out. That's one thing they do. The other thing they do, obviously, is increase price. And we're seeing both of those things in the multifamily space. So I'm seeing more and more insurance companies say no, which, that's problematic, obviously. And then I'm seeing other insurance have increased premiums associated with that. So that's really why we see price going up.
Okay. And that's really interesting. It's almost like the tax code, right? We always say that the tax code is there to incentivize people, right, to do certain things. And it's almost like the insurance carriers are self-selecting out. Like, there's no incentive for us to be here. We're out.
Yeah. And insurance companies, I think, and obviously I come from inside, so I see companies, and there are good companies and there are bad companies. There are a lot of good insurance companies that really do come from a perspective that when bad things happen, we're looking to cover the claim. Obviously, if it's just plain not covered on the insurance policy, then we're not going to cover the claim. But insurance policies are documents, our language, our words, and sometimes there are gray areas, and there are companies that are looking to deny claims, and there are companies that are looking to pay claims, and that absolutely exists in the insurance industry. And we obviously try and work with as many companies as possible that are trying to pay claims, because that's the mentality we want them to come from.
So, I mean, Jeremy, what I'm hearing is this is why I want to work with a high caliber, independent, broker like yourself versus someone working for just one company. Like, I'm assuming, and assumptions, we all know what that means, right? So
Right.
I don't want, but so correct me if my assumption is incorrect. But the assumption is working with someone like you means that's one more buffer between me and selecting a carrier that might not pay out when they should.
Yeah, absolutely. So I think that the number one key is to have someone you trust and you feel you connect with, right? That could be gotten to a variety of different ways, but I think that's number one, is make sure you establish that relationship. And then once you believe that relationship is a trustworthy relationship, trust it, and let that person do their job. So that would be number one. I think number two, with an independent agent, for one, as soon as you get into multifamily, most of these standard football commercial companies aren't going to be interested in insuring your property anymore. So you're going to end up with an insurance independent agent, kind of whether you want to or not. We're the ones who have access to the companies that can do commercial real estate, that can do multifamily, that can be in that space. And then, someone who specializes in real estate, in my opinion, is really important, because insurance is super complex. And I think those insurance agents that say, I'm going to specialize in this particular topic and understand it deeply, are the ones you want in your corner. And so if you go to your local agent who's on the, downtown in your space, and they're a generalist, they'll insure anybody, and they hear that you're about to pick up a 144 unit property, well, they're thinking about how much money they can make. And so they're going to tell you, absolutely, I can do that. I'm going to be amazing at that. That's going to be great. And the reality is they're going to be doing the best they can to put something together, and probably going to miss some things. I think a question that a lot of people ask, Julie, is how much money do we make? Because when you get a policy, like the weird thing about insurance that's different than attorneys and things like that is most of us don't charge a price. Like, we don't say, well, it costs you $100 an hour to work with us. It's just like you get a policy quote, and that's the number, and you either take it or you don't. And I think a lot of people go, I wonder how much money that guy or that lady makes, And I can answer that question for you. It's usually between 10 and 15% of your policy premium comes back to the independent agent. So if you have a $100,000 policy, that's $15,000. And so I think that, anybody would like to make $15,000. And so you can see why someone would say yes, and that becomes a problem, because a lot of people are saying yes to something they really don't know how to insure. So I think the relationship is most important. I think an independent agent is super key, because they're going to go out and make insurance companies fight for your business for you. And I think that someone who specializes in real estate is super key, because they actually understand what's going on in this space.
Oh, I love that. And you actually touch on this even in one of your podcast episodes that I was listening to a few months ago. And I'll have to search through and find which episode it was. Okay, so as we wrap up, I do want to ask one final question. And that is, a lot of times I'll have guests and they'll kind of give their nutshell version of, well, this is how you would select a sponsor or a general partnership to invest with. Well, there are a lot of really great insurance agents out there. And so, gosh, Jeremy, I know you, I like you, I trust you. Okay, let's just say, assuming that, so we're just comparing, insurance to insurance, I guess. Like, what's that final step that says, this is how you know you want to work with this person?
I think the biggest step is if you walk away from the conversation, and probably more than one conversation, but certainly particularly the conversation where they show you what they can offer, where they provide you the proposal for your portfolio. If you walk away from that conversation saying, one, I felt a real connection with that person. There's no doubt that just the vibe, the connection with a human is an important part of a relationship. But two, I feel like I understand what they're offering me. I think that a lot of folks, and we do a portfolio review for people, which is they just shoot over their policies for their portfolio. We do an assessment. I record a video and I just send it back to them. There's no pressure. There's not even a quote involved. It's just like, hey, here's what I see that you have. Here's some of the problems that you might want to fix with your agent. Let me know. I think that if so many insurance agents are just like, you walk away from the conversation, you're like, what the heck just happened?
Right.
Like, I have no idea what that person was saying. I have no better sense of what it is they're offering. I have one piece of information, and that's the price. And I think that my best advice to investors is, if that is the experience that you're having, find someone else, and find someone who can make clear to you. Now, if they're trying to spend 3 hours describing everything about the insurance policy, probably not the right person. That's probably the other side of the spectrum, right? But like someone who can just help you, you want to spend a half an hour, thinking about insurance, and then not have to think about it again for at least 6 months, or till you buy your next property, or till you have your next annual renewal, right? And if you spent that 20 minutes, half hour, and feel like you walked away with just dumber than you were before, then that's not it. So I think that's my last, how to find the best agent, is that they can explain what they're offering you in a simple way that makes sense and gives you the amount of information you want. If you're the kind of person who wants to ask 30 questions, ask 30 questions, and they should have a decent answer to all of those. If you're the kind of person who wants to ask 2, great. At least they were able to explain it on a level that made you understand it.
That's one of my criteria for who I work with in general, as well, is if I'm not comfortable going and asking that person a question, then I shouldn't be working with them. Because if I can't go and ask a question, and if I feel like it's a, ridiculous question, but I feel that I need to ask it, I need to have that comfort level to ask that question. That's kind of
100%. People, I probably hear this sentence, I have a dumb question, but here goes, every day, and it's like, I love it, right? It's like, good. Ask me the dumb question, because it's not a dumb question. One, we all know that. And two, it's something that you have on your mind. And I think that for most of my clients, they ask a lot of questions early on, and then we build that trust relationship, and they realize that, what we have going is a good thing. And then they ask a lot less questions after that, until they're picking up a new property or whatever.
That's really true. And you don't take that as a compliment. They're willing to ask you what their quote dumb questions, right? So that's a compliment to you. They feel comfortable.
Yeah, I think so. I think I create space for someone to feel like they're not supposed to be smart about insurance, but they're supposed to care a little bit. I think that's sort of the bar that I'm working for.
I love it. Well, Jeremy, as we wrap this up, I always, like, the time is flying by. As we wrap up, are there any other, is there another gem that you're like, I wish we would have touched on this, Julie?
Well, no, I just think, 80% of real estate investors have policies that are going to fail them. Like, it is such a high number. And I know that because I see them day after day after day when they come to me. And so I would just encourage folks, if you don't have a sense of, what you have going, then go out and find someone who can answer that question for you. And I think that's my biggest gem. There are no gems about insurance, Julie. It's insurance.
It's a gem, because you just said 80% of people, policies out there are going to fail. That's terrifying. So they can send, if someone's listening right now to this episode and they're concerned that they're part of that 80%, can they just shoot you how can they contact you and have some second eyes and maybe see what you can offer?
Well, I've got a quiz on my site. So, so many things were coming in, and I was like, okay, how can I just give someone like a really quick, easy way to say, am I one of those 80% or not? So I created a quiz. It's at shineinsurance.com/REI. And it's a 3-minute quiz. It's 5 questions. And it gives you a sense. I mean, obviously it's not an in-depth sense, but it gives you a basic sense of whether you're in that boat. And so you can do that. And then, like I said, we have the policy review that we do for folks as well, where they send us their stuff. We send us an assessment of their situation. There's no cost to it. There's no pressure around it. It's just information.
I love it. That is fantastic. And I love that teacher Jeremy created a quiz.
I did. Well,
and you only have 5 minutes to do this, guys. No kidding.
I was talking with one of our friends in podcast, John Castman, who has a great podcast in this realm and was also on the top 20. And I was telling him that stat. We were just talking, and he was like, man, you got to do something to give people an easy way to just really have a sense of that. So I was like, all right, well, I'll create a quiz. Again,
going back to where we started at the beginning of this episode, being a go-giver, giving back to the community. I love it. Yeah. Jeremy, thank you so much for joining us today on Ask Me How I Know. It's been pure joy.
It was a pleasure, Julie. Thank you so much for having me.
And to everybody listening, remember, one step stacks on top of another. So just take your first step and you are on your way to freedom.
Thanks so much for joining me for another episode of Ask Me How I Know. This episode was brought to you by 3 Keys Investments. They are dedicated to helping people like you, you, my awesome listeners, develop passive income and legacy wealth through multifamily investing. Feel free to check out their website, 3keysinvestments.com, to see if there is an offering that will help your portfolio grow and meet all of your needs. If you haven't already rated, reviewed, subscribed, liked, all of those bells and whistles, I would be absolutely honored if you would do that for Ask Me How I Know. Thanks again, and go make it a great day.